here with Andrew Cox. Andrew, what do you have for us today?
Hello, sir. I've got the DHL Supply Chain Pricing Power Index. Just a quick refresher. 0 would be all the powers to the shipper, 100 all the power to the carrier, 50 would be a balanced market here. This is kind of our synthesis of a lot of FreightWaves data sets that kind of gives us a little bit of insight into who's got the pricing power between the shippers and the carriers. Right now, we are at 25. We're the same point as we was last week. We haven't moved much because the data's been kind of muted. It was a mundane week. I struggled to find topics to write about because the volumes are almost exactly where they were last week and exactly where they were this time 2019. Rejection rates have tumbled since the Christmas high of like 14, 15, now down to around 5. This is below the 2019 average. Capacity is really loose around the entire country, as Donnie just mentioned. And then rates have absolutely fallen since Christmas. They're now down below $1.40 a mile, which is nearing that operating costs of a truck, so it can't really go much lower. That's the good sign.
Right.
Yeah.
So when I chat with you and I chat with Kevin about this index, a lot of that expectation was to have this kind of movement kind of slow in the first part of the year. What's the 3-month outlook looking like?
Yeah, you're right. It's very typical for capacity to be loose and volumes to be muted in the first couple months, especially January, February. That's the typical slow season of the freight industry. But we do expect things to loosen up, or tighten up, moving forward. And our 3-month outlook actually has it all the way at 45, nearly a balanced market. We're expecting when produce season comes into fruition and we have a little bit of a peak season there in the summer, I guess 3 months would be the end of April, we're expecting things to tighten up quite a bit and give some power to the carriers.
Got you. And there's a lot that goes into this. One of the things you mentioned, you watch different indexes. What are some of the components that you've seen lately for this?
Oh, sure. Well, we start out with rates, tender rejections, with load volumes. We look at a lot of economic data. This week, we didn't have all that much to deal with. We had inflation come up. The CPI came out this past week or Friday, and it ticked up a little bit. It was below expectations, but at right around 2.5% for the year, which is near the Fed's target. So we don't, and we looked at the Fed funds rate. They said they're not expecting to do anything, move up or down. There's actually, when you look at the futures market, there's a 40% chance that they actually cut rates in the next year. Even though inflation's kind of picking up, you would think that rates may increase, but it doesn't look like the Fed's going to do anything for the next few months. So our economic data is a little bit, again, the whole thing was just muted. There wasn't much going on this week.
Right. And I think even some of the releases I just saw from even today, I think industrial production just came out. Not a lot of change from the previous month, so it's looking like a slow and steady start to the year.
Yeah, it's okay. Things aren't bad, but things aren't great.
Yeah.
As long as we can just keep it moving, keep the consumer happy, I think we're be in for a decent year.
Exactly. I think the consumer retail sales were also a little bit flat, but still, like you said, positive, not bad, not amazing, but still growth nonetheless.
Right. As long as we can kind of get over this coronavirus hurdle that's kind of looming, I think we're in for a good year.
Yeah, I think that's going to be one of the huge. I think that's been the story of the year so far. I know we're only in February, but really the coronavirus has really been a huge talking point because it has had ripple effects all over the industry. Transportation really kind of seeing a lot of the impact here, and so it's really kind of uncertainty, a lot of uncertainty around how long that impact is really going to stick around.
Yeah, certainly, and it's going to have to take time to see when it gets here. We've already got a dozen cases in the U.S., but no major outbreak. Nobody's died. Everybody's recovering. But the people around China, the Chinese economies that they trade the most with, Australia and Japan, they're going to be the ones that are most impacted, even though that we are heavily involved with China. But they're going to be impacted first, and again, it will ripple to us. But we're hoping that we'll be able to withstand and find other partners in other places.
Excellent, Andrew. Thank you so much,
all right,
and thank you for tuning in. That's going to do it for this week's edition of the DHL Supply Chain Pricing Power Index. Be sure to tune in next week for our update.